Hey there, good morning, good afternoon, good evening, wherever you are in the world. Welcome. It's Chris from Avid Intent, and I just want to walk through what the heck happened with FTX, how you can avoid it, how this matters to you, and how to safely get involved with Bitcoin investing, because I think it's one of the best opportunities out there. So let's dive right into that content. First off, though, making it super clear, this is informational and educational content only. It's not financial advice. Your mileage may vary, lots of caveats, forward-looking statements, etc. So just know this is intended to help educate you and inform you. Please seek your favorite financial advisor for those types of decisions. Let's jump in. 6 topics we're going to talk about. Just a quick overview of what the heck happened with FTX. There's lots of articles and noise and stuff out there. I'm going to break it down very simply for you. I'm going to recommend that you get a hardware wallet, fellow Bitcoin investors, and tell you why. I'm going to tell you how to avoid interest-earning crypto accounts. That's part of the issue here. Why you should focus on Bitcoin, BTC primarily, how to safely mine that or other ways to acquire that without an exchange, and 4 easy action steps. So I'm not going to just wail on FTX and say how bad they are. I'm going to give you options of ways and actions you can take that are safe, that are proven, that will give you results. All right? So first, what the heck happened with FTX? For those of you who don't know, it was one of the largest crypto exchanges until literally this last week. And honestly, the pattern here is not that dissimilar from what happened in spring of 2022 with 3AC and Celsius and Luna and a variety of others. So please, let's not do this again. If nothing else from this video, I'm hoping to educate you on how not to do this again, how not to get exposed, and like a lot of people sadly did, lose lots and lots of their funds. So here's the pattern that happened with FTX. First, the exchange, FTX created their own token with zero value, literally from nothing. It's called FTT in this case. A lot of times exchanges do this so they can do swaps and move money around, but a lot of times, quite frankly, they do it to create a very quick exit for their investors and themselves. And that's what happened here. So they hyped that token. It became a relatively top token. Again, it's based on nothing. It's not a proof of work token. It's not backed by any government. There's nothing behind this token other than the company that supposedly has value out of thin air. That event created an exit for the venture capital firms behind it and exchanges. And what's really kind of frightening about this one, because of its size, no one did the diligence along the way. So some very reputable VC firms jumped in thinking it was okay without doing their diligence, and it was sadly based on absolutely nothing. Okay, so after that hype is created, supposedly this token has all this value. Guess what? The exchange then gets a loan on this value that was made up, that has no proof of work or anything backing it, and they overextend themselves to do a variety of things. Okay? The other thing in this case, and it happened in other events as well, is there's some bad acting in part of the exchange. They actually combined their investors' funds with their speculative funds. Without telling you, it's like someone took you to Vegas and didn't tell you they were taking you there and that the odds were bad and you're going to lose everything and they're going to build another hotel. It's almost the same thing that happened here, right? But there's no disclosures, no availability, no proof of that. Well, guess what happened? They got overextended and they went insolvent, which means they went bankrupt and have no funds. There's nothing to go after. There's no debt here. It's literally gone. So if you had 1,000 or 10,000 or even $10 in FTX, it is gone. Quick update is actually, in addition to the insolvency, the little bit left was actually hacked out yesterday, and the founder, Sam of FTX, has fled the country. I mean, this is almost like a movie. It's hard to believe it's even real, right? So that exchange goes insolvent. The exchange members lose everything. You're just done. There's nothing to claim there. Yes, there's a Chapter 11 thing, but the likelihood of you getting anything is about this much. Okay, and then it happens again. There are other exchanges out there. There's some really well-intentioned ones that I would include Coinbase and Gemini and those in there, but they're still exchanges. There are others that aren't that far away from FTX, or companies like BlockFi that did loans around FTX that are going to be exposed. So I highly recommend, for your own sanity, for your own safety, that you move your coins, hopefully they're mostly Bitcoin, into a hardware wallet. I'm going to walk you through how to do that. So it's not just this fear, oh my gosh, this blew up and the world's ending. Here's some really practical steps you can take to help yourself out and help your friends out. So first, get a hardware wallet. Now, a lot of people get really frightened. Oh my gosh, I've got to remember a seed phrase, and that's work, and it's scary, and versus an exchange, click, 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 and you're live. Well, that click, click, click in your live can go boom and it's all gone instantly too. So just keep that in mind. That 1 hour of time that there's involved setting up a wallet is worth so much more than losing everything you've got. It's a lot less scarier than losing an exchange. There are a lot of great ways to write down your key phrase. I get that it's not natural, but just realize that you're your own bank. If on Saturday morning you want to move money or Sunday night you want to move money, you don't need to ask permission. You don't have to wait for banker's hours. You just do it, right? And there's very few places in the world, in fact, none other than Bitcoin, that is done easily and simply. Again, 100% your money. No bank, no exchange, no venture capital firm, no CEO, no third party involved. It is all 100% yours. And it's even better than like the cash or gold that you jokingly hear about people putting in their mattress. And I'll talk about why that's the case in a bit. It allows secure peer-to-peer buying. So you can buy from any vendor or exchange money with a peer, or, mostly right now I would recommend holding on to it, or hodl as we say in the Bitcoin world, hold on for dear life. It's a really small effort, to secure that passphrase. So you can put it in a safety deposit box at a bank if you want. You can buy a fireproof safe. You can write it down and put it somewhere safe with another family member that you trust. Okay, but guard that thing. Do not take a picture of it and put it online. Don't, put it in a spreadsheet or an email. Those are the keys to your kingdom, as it were. So you do have to guard it. Yes, that's a little uncomfortable. Once you get over that, it is worth so much having this amount of freedom. Honestly, it's pretty fun too. After you get off that learning curve, and I get it that it's scary, I don't want to make light of that. It's scary to me at first, years ago when I did it, and I'm a tech person. Once I did it, it's really not that bad. And for all the benefits you get from that, absolutely worth it. Okay, I want you to avoid interest earning exchange accounts. Now, we're conditioned somewhat, at least in the West, if we put money in an account, we expect interest on it. We expect that interest because that bank or financial institution is going to lend it out for a mortgage or something else like that, and then pay us a small amount of interest for money they're getting. That makes debt larger. That makes our inflation cycle continue. For myself, $1,000 at my year of birth, a little over 50 years ago. Now it takes $7,000, 7 times to buy that. So do we want that to continue, and this inflation debt cycle to continue, binding us and really limiting us as a world? I say no. So it's not a bank. So you do have to think a little bit differently about this. You certainly want to gain on your investment, but there's different ways that happens in the Bitcoin world. And I get that that's different, and just hold on to that for just a moment. Ask yourself, in these interest earning crypto accounts, where's that yield come from? In the case of FTX, where are they getting that yield to pay you back from? And honestly, right now, if it's even 3%, most of those are 3 to 7% or something like that you're gaining on. The current treasury bond rate is 4%. You're going to get more from that, which I wouldn't recommend either. But just realize that yield's coming from somewhere, and if it's not clear, that yield's coming from you. Okay? Just hodling, holding on for dear life, crypto term, Bitcoin term, because of the scarcity in Bitcoin, your wealth will grow over time. So where Bitcoin is different, and this is a little quick money lesson here for you, our fiat currencies, the US dollar, the euro, Canadian dollar, all the major Western currencies are what are called fiat. They're not based on anything but the government's strength, the military might behind the government, and you're betting on that government's going to stay around. They can print as much money as they want. In fact, the US dollar has increased 40% of its volume in the last few years to get through COVID, to a variety of other things. So a group of people, bankers, get together and decide that. One is appointed by the federal government. The rest are bankers. The Federal Reserve is not federal, nor does it have reserves. Okay, so they have the ability to create money and funds forever. Bitcoin is limited. There will only ever be 21 billion Bitcoin, 21 million. I said it'd be there, 20 million Bitcoin. It will never increase. It'll never decrease. That's it. So there is limited supply. It's what's called a hard money. Okay? That in and of itself doesn't require interest rates or debt to increase its value. Just the scarcity alone will increase its value a very large amount. Now, the pattern that's happening in the interest earning accounts, it happened in the spring. It just happened with FTX. It will sadly happen again. The way you can protect yourself is not get involved in it, right? It looks exciting. It looks sexy. It seems easy. Just plan on losing your money if you do that, right? And I would say it's even worse odds than Vegas at this point. Focus on Bitcoin. I know there's 21,000 other tokens. They're really exciting. I used to invest in other tokens too and think that there's some options there. The more I've got involved, the more I've done my research, the more I've worked with people that are really, I would say, have high integrity and a lot of intention, and a lot of energy and real commerce in this space are in Bitcoin, 100% in Bitcoin. Not any of the other tokens, and here's why. One is that math I talked about. There's only 21 million tokens in Bitcoin, period. Every other major world currency will suffer from that, and most cryptos will suffer from that as well because they can just create more tokens. Proof of work is a big deal. Now, I know there's a lot of hype about mining and energy and all that. I promise you most of that's noise because it's about 0.1%, which is a rounding error for most other energy uses in the entire world. But proof of work guarantees it has a value. There's an amount of energy and amount of mathematical work that had to be created to back this coin. Not a government's might, not a VC, not a CEO, but really, folks, math and energy are what back Bitcoin. Again, there's no CEO, there's no VC, there's no government. And generally, when people get involved in things, we screw them up pretty well, right? Whether it's a government, whether it's an entity, whether it's an investment firm. We've seen these patterns in the .com world, we're seeing them in the crypto world, we've seen them in the stock world. Imagine if you could take all the people out of it and have money that's based on math, that's based on energy, that you don't need permission to use. That's exactly what Bitcoin is. It is nearly impossible to replicate it. You could do it. The effort would take, according to Michael Saylor, 3 years of almost all the world's energy, given all the time that's been spent on Bitcoin. And this open source, altruistic venture, and why would people create that when this already exists? So just to get to parity, it would take a huge amount of effort. And while a lot of other coins pretend that they're at parity, whether it's a Dogecoin or a Litecoin or other proofs of work, they're really just not to the place that Bitcoin is, and they won't get there quickly. Bitcoin is a commodity, which is a good thing, both per the SEC and the CFTC in the US. Everything else is a security and will be pursued by the SEC. So it's absolutely a commodity, which is a great thing. It's a very different regulation class. It's much easier to do commerce with a commodity than it is a security. And it's decentralized. So whether a government does or doesn't like it, whether a bank does or doesn't like it, whether a VC does or doesn't like it, that's interesting, but Bitcoin doesn't care. It's 100% decentralized. It's yours, yes, really, 100% your currency if you take custody in a hardware wallet. So safely acquiring Bitcoin, there's a mining option and there's a way to acquire Bitcoin outside of an exchange that I'm going to recommend. First, I'm going to talk through mining because that's what I do. And I'm going to talk through very, very briefly through the miner share program. I'm not trying to sell you. I'm just telling you what we do. Full investor custody. We don't take custody of any coin. Full transparency. You'll have the serial number of the device. You'll see the hashing of the device. You'll have full access to the pool, and it goes directly to your wallet daily. So very simple, no drama, and it's done for you. So you don't have to figure any of this stuff out. We do it for you. The way it works is you would have either 50% or 100% of a miner. I'm going to walk you through that. The term is either 1 year or 2 years. And after that, if you want to continue or you want to buy multiples through, that's awesome. But that's the model. It's pretty simple. So how it works is investors, we educate them. They make a choice. They fund their miner share if it's of interest. We provision those generally within a couple weeks. We've been doing incredibly quickly right now at that. These are dedicated miners, either 50% or 100%. You have full transparency to them. You see everything, right? We have nothing to hide. We're sharing everything around this. There's a U.S. contract we use for it. We're a U.S. LLC. We're registered with our state and our country and everything else. So this isn't a sort of thing where there's pool mining and you have no idea who's behind it. Full disclosure, everything that's there. The output goes directly to your wallets daily, period. Nothing in the middle. So if it's a great day, it goes to your wallet. If it's not a great day, it goes to your wallet. 100% of the output goes to your wallet. We prefer that you give us a hardware wallet. Again, we're not going to know based on the address what it is or isn't, but we recommend that for the reasons we shared already. And then that Bitcoin is held by you, not by me, not by a bank, not by a VC, not by an exchange that blows up. It's all yours to do. Now, I recommend you hodl that, you hang on to that for some time, both for Bitcoin increasing in value and for tax reasons. Again, not tax advice, but the longer you'll hodl that, the better result you'll see. So this isn't a short term, like 1 year, 2 years sort of, I'm going to get in, get out and make a ton of money. It is a 5-year, 10-year generational wealth sort of thing. If that's of interest to you, mining's a phenomenal option. It's a lot easier, especially if someone like me does it for you and sets it up. It's not as scary as you might think, and it's certainly a lot less scary than losing everything. Okay, that's mining. I'm going to give you 4 easy steps to get involved right now because, yes, while FTX blew up, the opportunity in Bitcoin probably could not get a lot better right now, even with the economy issues, even with another variety of issues around it. Bitcoin is an incredible opportunity to take advantage of as part of your investment portfolio. Again, not investment advice, not tax advice. This is educational and informational. First, buy and set up your hardware wallet. Just do it, okay? Just make it happen. A Ledger, Trezor, or whatever you prefer. Do your research, see what you like. I personally have Ledger. I have clients that have both Ledger and Trezor. Whatever works for you is fine. You really can't go wrong picking like one of the top 3 there. Start regular small investments. So if mining's a little scary to you and oh my gosh, that's a lot, and maybe a 4-figure, $1,000 or $5,000 or $10,000 investment sounds scary and you want to just start with 5, awesome. Go to a place like Swan Bitcoin. I'll put a link in the description below and have it sent to your hardware wallet. So places like Swan and others, you can buy Bitcoin and they will move it to your hardware wallet for you. They won't retain custody unless you want them to, which is really awesome. And Swan I like because they only do Bitcoin. So it's very, very, very simple. Invest in your own miner. So I both dollar cost average with Swan or Bitcoin cost average with Swan and of course run my own miners and run miners for my investors. You can do a miner share with us. You could do it on your own if you want me or someone like me to walk you through what that takes. Happy to do that as well. But miner share is really the easy. If it's fit for you, I've got options at 12 and 24 months, 50 and 100% of a miner. Now, all the costs are baked in, all the energy costs are baked in, everything's handled. If there's a maintenance issue, we handle that. We watch to make sure weird things don't happen and your miner stays up. So you just kind of enjoy the results. I'll put a link in the description if you want to know more about that. And then hodl and learn. So just hold that Bitcoin. Maybe you want to play with a tiny little amount and move it to a friend and move it back just to experience what that's like. Or buy a pizza with a vendor that accepts that or something like that. But just hold it and learn. Tons of information out there, but I would plan on holding your Bitcoin for 4 to 5 years, maybe longer, for generational wealth for your kids, for your kids' kids. We send weekly emails to our clients and educate all of them. There's a lot of other awesome resources on YouTube. There's some great books out there. There's a Satoshi white paper, which is a phenomenal read. It's only 8 pages. So I'll put that link in the description if you want to start there. And don't get overwhelmed. Just keep this simple. If there's something you don't understand, mark it, breeze through it, and come back to it later. You don't have to be an expert of every part of the stack of Bitcoin to get involved and enjoy the benefits. So thank you for listening. I hope that you weren't burned by FTX. I hope you don't get burned by another exchange. And I hope this was useful. So you've got some useful steps right now to go buy some Bitcoin on Swan, to mine with us if you like, and just hodl. Take care, be humble, success to you and your families.